One of my favorite times of the week. It's 8:36 on Tuesday, and that's we bring in Nic Chahine. He's an options
Good
expert.
morning.
Good morning, Nick. How you doing today?
Doing fantastic, you?
We're doing good, boy. Dennis and I are arguing a lot today, so it's good
Oh,
that.
I'm laughing my butt off over here.
We're in a full-on Twitter battle here. What are your thoughts on Twitter here, Nick? What do you think? Do I have any legs with my argument here that this might not have the mass appeal that everybody like a Facebook has?
Yeah, I see both points, but I would not short it for the same reason exactly you stated.
That's why I'm scared. It gets
Yeah,
bought out.
you either go long it and plug your nose and jump in and hope for the best long term, like what Joel's doing, or you just walk away from it. Um,
So
you know,
it's too risky. Buyout.
yeah, shorting it outright is dangerous. Could be dangerous. Puts maybe if you want to argue that way, that'd be the safer way to go.
So could I just set me up a trade here, like a debit put spread or something, or a debit call spread, something, where I'm not going to get murdered if it gets taken over, but I can profit on the downside. Can you set me something up here, Nick?
Sure, you can do a debit put spread that is close to the money right now. So this way you only have to guess the direction and not the amplitude, like how far they're going to drop it.
Okay.
So you pick one out in time and you basically spend 50 cents to make 50 cents, or you spend a dollar to make a dollar. If you buy it close to the current price, if it falls through both legs of the puts that you bought and sold, then you stand to double your profits. So you can either do cheap every week or every couple of weeks, or do one long term and forget about it. And once you get that boom, big whoosh down, you're in the money.
I like getting paid though, so I could write like a credit call spread on this thing too, right?
Credit call spread, yes, but the headline will blow you out to the maximum loss of that spread. So if you're
Right.
willing to stand, if you collect 10 cents, for example,
Yeah.
on a dollar wide spread, so your
I wouldn't
yield
want to do
is,
that.
well, your yield is, why not? Let me rephrase. Would you
Okay.
like to make 11% on yield on your money at risk?
Yes. Yes.
Okay, then 10 cents on a dollar is gets you right there.
Okay.
Yeah, Nick, he has a way of putting those in there, and they're right. As long as you can control your risk, Nick, I love your overall thoughts on the market here. I've been driving you crazy over the last week or so, telling you we're gonna move, and you're like, well, yeah, we're gonna move, but save your money and wait, don't buy the premium. I don't listen. What is gonna shake us out of this doldrums here? What are you keen on?
Headlines. And it could go either way. I would say it's a 50-50, but it's better said it's a binary event this week, and we have multi facets to it. And the biggest one, the first one, I should say, which is a big one, is Draghi and the ECB. Will they, won't they, and how much? I think he's been talking it up for what, 2, 3 years now. He comes up, I'm going to do more. I've got a bazooka. I've got this, and the market goes yay every time. This time they actually expect him to do something. So I think if he comes in with his usual rhetoric of okay, we're going to do more, everything's working just fine. First he starts says okay, everything's terrible, and then okay, our plan is working and we're ready to do more. It's very conflicting. So I think we need to see something from him this time, from the ECB. They need to either tell us okay, we're going to extend it in time, we're going to expand the purchases, we're going to add this. I don't know what they're going to deliver. And if the markets get disappointed, that could be the trigger down. If not, we could, rise up. And we do have levels that feed each other. Like if we break the 2093-ish today, we could easily get to 2100, which in turn will become another, break point upwards potential. And on the downside, the recent lows, and you can measure against those. And same with the Nasdaq. But the biggest fight, I think, is in the small caps. I'm looking at that.
When's the dragster supposed to speak again?
I'm
The
going to say
dragster.
Wednesday and Thursday. Oh, actually, Thursday and Friday, maybe. I'm not sure. So
If
check the.
yeah,
I think they start on Wednesday, maybe even tomorrow, today or tomorrow. But I think he speaks twice, once on Thursday, once on Friday. But I'm not certain. Definitely double check the
if
difference.
my memory serves me correctly, he's
It never
rallied the
does though.
heck
No,
out of the
actually it does.
He's
Sorry.
rallied the spoos the last few times he's spoken. I mean, if I can remember being on the other side of that. But all right, let's move on here, Nick. We got some other issues to cover here today, and one we
Which
always like to get your take on: Priceline.
Okay, Priceline, like I told you, it's had some big moves recently, and the best way to trade it is with long-term stuff. so you don't get hurt because it does run. I think the day we spoke, it ran like one of those big moves that one day. So it's teetering. The range is tight, and it's got a move coming. So above 1275, it could rally back to like 1350 or so. If it loses that 1225 area, 1220, it could chance a whoosh down. So I would say it's market dependent. So unless it has a headline itself, where the market goes, Priceline's going to go, and then a little bit faster. So that's how I would play Priceline. So if I wanted to do a credit put spread in Priceline, I would definitely want to hide behind below the 1100 level. And if I wanted to do a credit call spread, I would definitely want to be above the $1,400 level. And basically, I would want to do it in Iron Condor, so I would be somewhat hedged.
Nick, what about Amazon here? We had the stock get a little bit of lift ahead of Black Friday, but then sold off on Black Friday. Now it's sold off here on Cyber Monday. Now Barclays comes in and upgrades the stock this morning. It's going to bounce back here in the pre-market. What are your technical thoughts on Amazon?
Well, Amazon, long term, is the ultimate growth company. It's a beast.
Yeah.
I'll tell you a personal story.
Right. You got to you got it right long term. You've been on the show saying this for 2 years that this stock, you've been bullish, a long term overall. So not changing that thesis?
No, but the thing is, technically you asked, and technically it's like a rising wedge, and it's droopy the last couple of candles. Today's a different day, obviously, but usually the wedges, if you lose the lower end, it tends to drop a little bit, and so I would leave room for that. But until they show me that they can't execute their growth plans, there's no reason to short it. I think I heard you say you wanted to short it or something like that. So why did you run out? Did you run out of GoPros and Teslas?
Yeah, Dennis is so bearish today.
No, my time horizon's an hour though, Nick. Yeah. So,
but here's the thing with Amazon. I'll tell you a personal story. A few weekends ago, I installed fake grass in our backyard because California water. You can't water anything. Brown is the new green. I don't subscribe to that. It's pretty ugly brown. So I ordered it on Amazon. It was there the next day. I mean, if you can order lawn on Amazon and then return the extra with a click of a button at zero
cost. You can return lawn?
Yes.
Come on.
I over-ordered. I said, okay, I don't need this one. I don't need that one. The next day, FedEx guy comes in, picks it up, hands me a piece of paper. Goodbye.
So, Nick, you ordered 3 acres instead of 2?
In California, are you kidding? The houses are as big as a lot.
You just need 2 rolls of sod.
All right, Nick. Moving on here. SF Bright G, one of our veteran traders in the room here, is looking at UA here. Downgraded yesterday, right, Dennis? Was that the bad news?
Yeah, I think it was. My goldfish memory, but I believe if I go to my sheets, it wasn't a downgrade, but Piper Jaffray cut their price target on it.
Okay.
And that's really what the catalyst was. They also cut their estimates for it too. So Piper gave it the beats yesterday.
Yeah, Piper was the axe in the stock. SF Bright G's taking a look at it. What's your technical and or fundamental thoughts in Under Armour?
Well, fundamentally, Under Armour has a good reputation of executing, and that it's beating up on the big boys. It not quote being a big company like competing against the Nikes. It's not easy, yet they managed to do it. And the technical part about it is, I think the reason why they probably downgraded is because it's losing. If you pull up a 2-year chart, you can draw a line against the lows. And yesterday's candle was breaching that line, but it did that a few days ago too. And actually on the 17th, I wrote a note to my members saying that look out, there could be trouble below if they can't hold that 2-year long ascending trend line, the bottom end of it. You don't want to lose it. And if you do lose it, you tend to overshoot to the downside. So if it sees the lower 80s, I wouldn't be too surprised, but I wouldn't call it there just for that. So again, market dependent. If the markets bounce, they may help it avoid that situation, and the recent lows should hold, which is what, 84-ish maybe eyeball from here. So if the market's correct, it might be vulnerable to a bigger downside.
Yeah, I'd maybe look. I mean, the day that it had a double bottom just under the 85 level, maybe some kind of formation, so you have something to lean on. We're going to go back here to a stock I don't know if we've ever talked to you about. Maybe we have. I'm sure we covered just about everything. But DC1 is looking at IBM. Look at that rally.
Big blue.
Yeah, look at that rally in IBM, boy.
Huge rally.
Well,
IBM Riley, where? Am I looking at the wrong chart?
no, it did.
Last 2 weeks, it's come back. A big blue isn't so blue anymore.
Wait a
Yeah.
minute. My computer
It's
must
still
have.
like it still looks pretty blue to you.
Okay. I don't like it for the simple reason is every time I hear them talk, their best their their best asset is something that predicts stuff. I don't know. They have to, technically they could be breaking out of a descending wedge of sorts, like a descending trend where you're setting lower highs and lower lows, and then suddenly you want to break out of it. So yes, it could be a candidate for a technical breakout from here. But I would want them to show me the money first, that they can break that line.
Yeah.
I don't want to anticipate it. Fundamentally, they haven't given me a reason, and technically, they need to prove it to me.
The 140 looks big to me here too, so I agree with you here, Nick. I think this is still the Bears are still in control here until proven otherwise. So, and 140 is a big test for them. So maybe it gets up, maybe it gets up to 141. But you really need to see this thing start getting in the mid 145s before you can get excited here because
Yeah,
there's just been so many sellers.
just connect the recent highs on the way
Yeah,
down, and then
yeah.
as soon as it closes above that, maybe then you get a little bit excited.
Yeah, 140 looks important. On charts where, you always could put in, bought here, sold here. I'd like to do, call up the company and ask them if they could do a weekly chart of where they bought stock back. Because they've been,
Oh man, they bought it high.
oh,
Those
man.
buybacks, and this is why I like the dividends or special dividends as opposed to buybacks, because these
Yeah,
companies seem to buy back their stock at too high prices. I think it was a
yeah.
lot in the 200s.
I'm with you. I'd want the money in my pocket. Listen,
Yeah.
It
yeah,
wasn't in the 200s for very long, Dennis. I mean, a couple
I
months.
don't know. It was up there for a few months. I think there was buybacks then. It was definitely above 190. They were doing
I
buybacks
don't
here.
like buybacks. It says a lot about the company. Everybody says it, and I agree with everybody that you got nothing better to do with your money than buy own. But some companies do it successfully, like Apple, because there is inherent value, a bottom of sorts. So it's kind of like putting your money to work with them. But with companies that with questionable futures, that's a waste of money, potentially a waste of money.
What about, and then this is an old stodgy one, old Pfizer here, doing the deal with Allergan, got down to that 31 level. Boy, it didn't give me much of a chance to put an order in there. Now you're back up at 33 here, rejuvenating themselves with, a company with more growth. I think they still got some pretty good drugs in the pipeline here. Old, you're not going to get rich overnight owning this one, but what's your thoughts on Pfizer?
So I don't follow it fundamentally. So how come when they announced, all year long, every time somebody announces, both companies rally, and in this case, am I wrong to think that they didn't, or they
Not
were
the last 4 or 5 deals, though. They have been selling the
okay?
acquirer. But for years, you're right, Nick. I would say in this bull market, the last 2 or 3 years, they've announced a merger and both companies rally. But the last 3 or 4 deals, it hasn't been the case. They actually have been hitting the acquirer, and
All
they
right.
did in this case as well. So,
So
um,
technically speaking, on this one, I still same as IBM. I want to see if they can break the lower high trend that they've had. If you consider from like late October to now. Other technical thing, if you wanted to look at the open interest, I think there's no reason to chase this past 33, 33.30 or something like that, based on the open interest for this week. Looking out, I don't see a lot of information that could help me, but the range looks like it wants to be between 32 and a half and 33 and a half. So looking out to December, I wouldn't chase it too far. Um, but there could be a 34 number there in the next couple of weeks.
Nick, do you? I mean, I know you have your different portfolios. Do you trade? Do you have anything where you sock away the dividend-paying stocks, or you just try
No,
and create your own yield?
I create my own yield. I chase the dividends. I did some Utes a while back, and the company ended up cutting the dividend, and all of that money went away. Yeah, I collected great dividends until they get whacked. So, and then what? You end up holding toilet paper, basically. So, it's I got away from it. I'd rather either have cash or the potential to create your own yield. And I think the most I do is hold calls in certain situations. But again, I usually put them to work either by selling calls against them shorter term, or doing some credit put spread to finance those calls. Like last time I went long Apple, I bought the calls and sold the credit put spread and sold a call against the call I had. So I went long Apple with very cheap money.
All right. We've been on the line with Nic Chahine. He's an option expert, joins us every Tuesday to discuss this week's options outlook. Marketfy Maven and the author of Create Income with Option Spread. Nic, a pleasure as always. Have a great day. We'll speak to you next Tuesday.
Excellent. Looking forward.